Art Energy's Premium Blend Series presents exclusive interviews about the oil and gas sector with the industry's best managers and analysts.
I think the theme of the universe as we know it today, it remains liquidity, capital availability. So as it relates to the world from our lens, capital availability and liquidity remain paramount. From a first lien perspective, which is the world that we live in, quite often I think that a strong emphasis is put on maintaining liquidity and capital availability. And as you go down the capital stack, it becomes ever more important. The first perspective would be companies that are levered already, and companies that maybe have entered into credit agreements at a price level that was higher than where we're at today. And from a strategy perspective, you're seeing again, preservation of liquidity remains key. Focusing on capital spend to be within cash flow, even if that comes at the sacrifice of reserve replacement or potential acreage expiring, simply because balance sheet preservation remains what everybody is focused on. In order to achieve that type of preservation, there needs to be a strong working relationship between the company and their capital provider. There needs to be recognition across both levels that, like you said, we've entered into this period in a very short amount of time. It's an unprecedented decline, and so as a result, there needs to be flexibility, but it's on both ends of the table. The other lens you can view it from are new opportunities, companies that maybe don't have a loan in place, companies that maybe don't have much assets, and from that perspective, you're seeing a much more aggressive strategy. You're seeing those that are seeing this as an opportunity to buy assets for cheaper values, and I think from that perspective there presents quite a bit of opportunity. There's not much value that's being ascribed to assets that aren't producing in today's market. So we have seen a sea change into a more production enhancement model that has a strong level of cash flow associated with it through a good PDP inventory with maybe some upside in the form of workover recompletion, but not nearly as large of a focus on your lease X thousand acres and drill a couple of horizontal wells. I think the most opportunity resides in the hands of those that are either unlevered or have a large liquidity balance that they're seeking to place into assets. I think that you'll see some asset devaluations, and as we discussed just now, I do think you'll see a tightening of the bid-ask spread that will allow for some increased A&D activity. So the most opportunities lie within those that have the capital availability and the liquidity to be able to transact. The fact remains that there still is quite a bit of capital availability on the sidelines from an equity perspective and even from a bank perspective. While you have speaking specifically to the senior lending market, which is the world that I live in, you have some uncertainties, but I do, from my perspective, there is quite a bit of increased appetite to actually transact. I mean, if a deal works at $30, obviously it's going to work, at $50, $60, $70.
To learn more about this topic and others, check out this month's print edition or the daily updates on this website.